So this is the Euro Yen analysis for Monday 30th of October. Now, let's just have a look what happened on the 27th of October. So we were expecting a further continuation in light of the Euro weakness. Euro weakness was as a result of the ECB policy. They've outlined that they're expecting they're expected to continue QE until September 2018. And also the ECB's has indicated their willingness to act if there's further weakness within the Eurozone. So we're expecting further continuation, and that's pretty much what we saw. We saw further selling momentum come into the market, and we weren't able to hold this 32.83 level. We've seen prices retrace all the way down to this 32.02 level, the next weekly pivot. And what we're expecting is further continuation to the downside of the euro. We're expecting the further continuation as over the medium to a long term. The policy outlined by the ECB is likely to be interpreted by the market as being euro bearish. So we're looking to see how prices react in around 31.70, whether we do see a retracement bounce from 31.70, possibly all the way back up to 32.83, where we've also got the 400 period average, before we'll see a possible. So let's just grab the pen. I suppose it makes it a lot easier. So what we're saying is one like to see is prices come down to 31.70, and we get a bit of a dead cat bounce, or a whereby we see a retracement, but we instead after which we'll see a continuation of prices to the downside. So prices possibly coming down to 31.70, retrace all the way back up to this weekly pivot in around 32.83, before it turns around for another retest of 31.70 and a trade below that. We'll look at levels below that as well. So at some point we'll likely see some, whether it's profit taking or some bulls re-enter the market. But in around this major level of 31.70 will be a pretty nice level for them to re-enter the market for move all the way possibly back to this 32.83. I can't anticipate prices retracing all the way back up to this 33.45, especially as we did see the selling momentum coming to the market in around this 134. So I can't imagine you within 55 pips of that level. So I can't imagine prices getting all the way back up there. But 32.83 is well within range, and it should be a pretty nice level for a sell back all the way down to 31.70. So beyond 31.70, where are we looking for prices to go? We're looking at the next very level is at 30.60, beyond which we're looking at 29.45. Can't anticipate price moving beyond 29.45 on Monday the 30th. That's our downside target. Upside, all the levels are pretty much marked out, but I can't anticipate price getting all the way back up to this 200 period moving average and this weekly pivot at 33.45. So let's just have a look at the higher time frames as well, see where we are. Let's just get scaling on here correct. So on this monthly chart, we have had the 6th consecutive month of bullish price action. Prices closing near their highs, which indicate that we are in a strong uptrend. We've had our low and we've had a higher low after a pullback, and we were expecting continuation. So on this monthly chart, we were expecting continuation to the upside. At present, we are not going to likely see this continuation out of the policy change, but the overall trend on the monthly chart is a bullish trend. Now, if I do, let's go down to the weekly chart next. So on this weekly chart, below us, we can see prices have stalled in around this 134 level. So the first indicator was the candle that opened on the 18th of September. We've had a bit of brief sell-off. We've oh my gosh, let's just grab the pen. So we had a bit of sell-off. We did say what we had was a bit of a bull flag forming due to the size of the candles. That we didn't see much selling momentum. Now we did say we did interpret this bullish weekly candle here as being our bullish continuation candle. That was the week before last. But the fundamental news catalyst of the ECB policy change, well, the policy continuation of the policy really, the confirmation of the ECB policy on this red candle here a pretty strong weekly candle to the downside, a pretty strong bearish candle, pretty much negated the previous week bull flag continuation pattern. So here on the weekly chart, even though we are clearly still in a uptrend, by as we can see by these higher lows, bull flag continuation, bull flag continuation. In light of the shift of the ECB on this strong bearish candle, we are expecting further continuation to the downside. So let's look for potential downside targets of the dynamic kind, because we've already identified the horizontal levels. So we've got the as well as the most important level beneath us is the 200 period moving average, currently sitting at 30.24, and we've also got a 20 period moving average sitting at 30.15. So they're pretty close to one another, within about 10 or so pips of one another. So that's the very next level that we'll be looking to target in the shadow of the strong bearish candle closing near its lows and a shift in the ECB policy. Now, let's just have a look at the daily chart just quickly before we wrap this all up. So on this daily chart, we can see we had a bit of a range in this roundish zone between 31.70 and 134. Now, we did see this candle, pretty strong candle. We've come all the way up to this 134 level, had a brief sell-off. The very next candle closed bullish near its highs, and we had one day where we actually traded and closed above that level. But the news catalyst came into the market here on the 26th. Candle closing near the lows. Again, we've had strong continuation on the 27th. Candle closing near the lows again. So we've had two daily candles closing near the lows, indicating some strong momentum in the market. So we do expect prices to retest at 31.70. We might see that dead cat bounce before we see further continuation, breakout to the downside from this zone of 31.70 and 134. So yep, that should wrap up the euro yen analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.